You wrote something at Capital Group that I think has been the most read document in the last decade, and it was called The Girlfriend's Guide to Stocks.
Some of the stocks that I had invested in started to remind me of old boyfriends. And what I've learned is that the best relationships don't take that much work. The best stocks are ones that let you sleep at night. They're just easy to hold. Like they're easy, people who are easy to be with. The great thing about public market investing is you can sell, and there's a lot of other companies to invest in. What you learn in healthcare services is that every 3 to 8 years, the government will make a big change. When the government makes a change, it's with a machete instead of with a scalpel. And when things happen, you have to be ready to invest in the things that are going to grow a lot and try to stay away from the things that they're trying to cut even just a little.
And is there one or two stocks that you would highlight where it fits that mold of being cheap and a good dividend payer?
Today we have Cheryl Frank with us. Cheryl is a portfolio manager based in San Francisco, been at Capital Group for 22 years. She also got my message last night that we like to twin with our guests. So this is why we look almost identical, minus the hair. But Cheryl, welcome. Glad you're here.
Thanks.
So Cheryl, you came out of the gates fast yourself when you started investing. So around the time you got your driver's license, somewhere around that time, you also inherited a little bit of money, and it happened to be in Capital Group strategies. Can you share that with us as we get going?
Yeah. My first experience with investing came, I guess, pretty early on, but I was fortunate enough to have a modest inheritance from my grandmother. I probably wouldn't be in this seat right now if it hadn't been for that, because I probably never would have gotten exposed to investing early on. So it gave me a very small amount of money to start thinking about kind of what is the market doing and taking some ownership. It took me a while to figure out the things that were in the portfolio and who they were suitable for. And one of them was the Income Fund of America, which is usually something that would be held in the portfolio of an 83-year-old woman and not a 16-year-old girl.
A little different investment objective, yeah.
Exactly. But it made me appreciate the value of an advisor, because I realized that there was this great advisor who took care of my grandmother so well. The value of dividend stocks, which are great income
Still
for
today,
people to live
about,
off of. And the value of active management, because there were also some single stocks in that portfolio. And you realize if you don't manage them, you end up with a portfolio that reflects yesterday's economy instead of the future.
So a 16-year-old seeing individual stocks in your portfolio, that's got to be an interesting thing. When you looked at those stocks, I don't know if you remember them specifically, but did they represent what you think your grandmother would have wanted to own, or was the financial advisor just putting in names at that time that were good stocks down?
He built a balanced portfolio of what you would expect at the time, which was, energy stocks and pharmaceutical companies. And if you think back to, the 80s and 90s, those were huge parts of the economy. Banks, telecommunications companies, and some of those things never got touched. My mom and my sister and I each got little pieces. And so I can kind of see what's happened to things that you don't manage, and you have all these little pieces of spin-offs and then companies that just sort of wither away. So active management is important.
So fast forward to 2002, you joined as a healthcare analyst, but it was right after the tech bubble burst. So how was it joining at that time, and what did you learn during that time that really informs how you're an investor today?
Yeah. So I started off in healthcare first. They started me off on the easy and unsexy coverage because I covered healthcare services, not pharma, which is where all the smart kids go. But what you learn in healthcare services is that the government is the most important payer, and the government, unlike our health insurance coverage where, we can change it every year and adjust the benefit design. The benefit design for Medicare and Medicaid is very static and doesn't really change. So every 3 to 8 years, the government will make a big change. And when the government makes a change, it's with a machete instead of with a scalpel.
Right.
And so you learn to watch the government, and you watch where they're headed with policy. And when things happen, you have to be ready to invest in the things that are going to grow a lot and try to stay away from the things that they're trying to cut even just a little. Technology came a little bit later.
How many years after you started did you take on technology?
About 5 years.
Okay.
And technology is different because there's huge economies of scale. It's not as geographically diverse. Like you can build one product and sell it all around the United States and around the globe. So it's a very international business. And leadership matters in so much, and capital allocation and kind of seeing around corners. And it's sort of a winner-take-all business in a lot of places. So getting the big stocks right really matters. So you have to pay attention and you have to invest with people that you really trust and think are visionaries.
And how big is that a difference between healthcare and technology in terms of leadership? I mean, we've had, fortunately, many episodes now of our podcast, and we hear varying degrees of how much investors put, or the importance they put on management. Is it different for you? Does a tech CEO and a healthcare CEO, do you put a different level of importance on one versus the other?
Yeah, actually, in technology, a great CEO can make a huge difference. We've done a lot of studies and governance internally. And we've looked at sort of, when does it make sense to go and pay a lot to hire someone? And like in technology, a good person can make a huge difference. In a bank, a good person makes a big difference, but like the range of outcomes is a bit more narrow. And in healthcare, there's some really great leadership, but they tend not to be as much in the spotlight.
Well, and I'm guessing some of it has to do to how heavily regulated the industry is as well.
Yeah, it's true. But even if you look in pharma, I think people are attracted to industries where they can have an impact, right? So if they feel the opportunity, even if it's a regulated industry, if people feel like they can have an impact and really change people's lives, it attracts smart people.
So you wrote something at Capital Group that I think, and you can correct me if I'm wrong, but I think has been the most read document in the last decade, maybe longer, and it was called The Girlfriend's Guide to Stocks. So A, is that a true statement? Is it the most downloaded and read? And then what was it? What did you write about, and why have so many people read it?
Yeah. So I'm told it's the most read piece of research. It's somewhat timeless. A lot of the research we write is very time specific. At Capital as analysts, we cover industries for a long period of time. So I covered healthcare for 19 years. So it's a long-term relationship that you have with these companies, and you're seeing them year in, year out. And when you're investing, it's a close relationship. Like you're really, really following things closely. And what I realized is that some of the stocks that I had invested in started to remind me of old boyfriends. And so I wrote this piece kind of comparing different types of investments to different types of people that you might date. And I think part of the reason that it's timeless is because there's actually some kind of timeless advice in there. So what you realize is that you have relationships that are good relationships, and you have relationships that are not so good relationships, and sometimes abusive relationships. And what I've learned is that the best relationships don't take that much work. So as an analyst or as an investor, the best stocks are ones that let you sleep at night, like don't really have lots of big blowups. Like they're just easy to hold. Like they're easy, people who are easy to be with, right? And then conversely, you have companies that, pre-announce or execute badly or don't do what they say they're going to do, and they cause you a ton of heartache. They keep you up at night. They're really hard to hold. And what I've learned is that you should break up quickly.
Right.
Like the great thing about public market investing is you can sell and you can walk away, and there's a lot of other companies to invest in. And so the sooner you realize you're in an abusive relationship or not a healthy relationship, the better, and you should get out.
So are you disciplined in that approach now? Do you break up quickly with a stock? What is that tipping point to you? Is it the percentage of mind share? Is it the amount of angst? What causes you to hit that moment where you hit the eject button?
Yeah, I mean, it is angst, and I have to be disciplined about how I practice it. But more often, you see it in other people where you're like, wow, this is the 7th note you've written about this company in the last month. Like, sounds like it's not going so well.
Right. Seems like you're in deep.
Yeah. Or people say like, oh, Like, I'm like, this is a bad boyfriend. Like, you might need to leave.
So that's right. I think we've hit our moment. So you also, in that same note that you wrote, you talk about stocks being like the hot guy on a motorcycle. So you have to tell us more. Anytime an analyst at the time writes about a hot guy on a motorcycle, there has to be more to it.
Yeah. So interestingly, dating and investing, you find your type of person, right? Like the kind of person that you're looking for, that you're compatible with. And for instance, like a dividend stock might be like this nice guy who drives a Volvo and has a stable job that he's worked at for 20 years, and you can count on him to bring home his income, and he doesn't surprise you, and he's, comes to dinner with your parents. Like,
it all just works.
It all just works. Yeah. But, and some people are totally happy with this like wonderful, good, solid relationship. And then you have other kinds of stocks. So I made this analogy, or someone kind of proposed it to me, which is that growth stocks are sort of like a hot guy on a motorcycle. Because growth stocks often and almost always have more risk, depending on where they are in their life cycle. And some have binary risks in terms of product success. They can, often be spending tons of money to grow. Like, there are all these things where you look at them and you're like, wow, I'm not sure I really want to marry this guy. Like, he's got a lot of things wrong with him, right? But at the same time, like, the hot guy on the motorcycle analogy is like, well, he might be fun to date, right? Like, you might enjoy spending time with him for a bit. And you can kind of know that, like, he's probably not marriage material unless he maybe changes a little, or maybe never will be. But for some people, it shouldn't keep you from going on a date.
Now, did your husband, Michael, read this guide?
Yeah. Oh, yeah. He's read it.
No, we can send it to him.
The last line is, good men are hard to find. And, they're best if you find them early, and you can kind of grow with them over time.
Got it. Let's shift to opportunities in the market today. And the only caveat is nothing that's an open order on the trading desk, buy or sell. But you talk about dividend stocks, and you talk about dividend payers that have been left behind. When we produced the 2025 outlook earlier this year, you wrote about that. Tell us about some of the strategy itself, and then maybe also some of the stocks that you found to be interesting.
Yeah. Well, I think right now, we have been in this moment, right? This AI moment for a while now. And every day it seems like this AI theme is driving that space up.
Overwhelming the news cycle.
It is. And it for the past 2 years, right? We had this sort of recovery of growth stocks, and AI has been the focus. And what's interesting to me is that a lot of defensive companies, whether it's staples, whether it's utilities, to some extent banks, a lot of pharma, they're trading at almost all-time low relative valuations. Like, so if you look back 15 years relative to the market, they're kind of as inexpensive as they get. And from that kind of level, like, first of all, it's telling you that the market is just not focused there right now. Mm-hmm. We just had selection. We have a new administration that's very kind of pro-economy and deregulation. And I think there's conventional wisdom is that we're going to have a very strong economy for the next several years. So everyone would say, like, oh, you've got to go in growth stocks and pro-cyclicals. And yet a lot of that, I think, is priced in. A lot of those companies are very expensive. And then if you look at the defensives, they're sort of left behind.
So from a valuation perspective, I think it's in our outlook, I've seen one of those slides that shows the P relative to the broader market, and it being at whatever 25 year low. Same for small mid-cap stocks, by the way, similar type of mentality. So what causes the market to then revalue these companies? Because they've been cheap for a while. They've been getting cheaper on a relative basis as the rest of the market's grown in valuation. But what's the catalyst? Is it a rotation? Is it a recognition of value? Is it a need for income? What ultimately causes the tide to turn in that relative world?
You can always speculate about like what might be coming, but usually it's something that we don't expect. But we did. I mean, if you just look back to 2022, we had this moment where, rates rose, inflation was sticky, and all of the kind of high expensive stocks sold off, and all the value stocks did really well. And you could have that moment again now, right? There's plenty of risks in this economy for kind of stickier or higher inflation. The labor market's really tight still. So if we had a realization that rates, instead of continuing to fall, are actually going to rise from here or stay the same, I actually think you could see a revaluation in some of these more expensive stocks, and some of the cheaper stocks would probably do better.
A bit of a replay of 2022. And is there one or two stocks that you would highlight where you have conviction in over the next 5-10 years, long-term holding, where it fits that mold of being cheap and a good dividend payer?
I'd probably just highlight sectors, right? So I think utilities are really interesting because if you think about the combination of the growth of EVs on the grid, the growth of AI, and the onshoring that we're about to do, like we're about to have electricity growth, which we haven't had in 2 decades. That means lots of rate cases, lots of capital being put to work in utilities. Banks, which are probably going to face a better regulatory environment than they have for a while. Pharma, where we have just the continuing evolution of AI and machine learning and all of the technology tools being applied to pharmaceutical development and research. And staples, which they have kind of a less exciting fundamental story, but they're very stable, right? And
good valuations.
Good valuations. They've been hit by sort of concerns about GLP-1s. So, I think there are a lot of places to look.
So we talked about 2022. If you go a couple of years back further, and the beginning of COVID, another article that you had written is the pandemic decade. So there's a point where, quote unquote, COVID feels like it's over. Everyone has their own moment where they felt like that.
Yeah.
But you wrote about it being, the tail to it being long. And there was a rush of money into certain stocks that just became super important overnight in a lot of people's minds and their lives in reality.
Yeah.
And then other whole sectors or industries that were starved of capital because people were sure it was the end of the world for them. And I thought it was a really interesting piece. So can you tell us a little bit about the view of the pandemic decade?
Yeah, well, I'm impressed that you read my notes.
Well, I was preparing, but yes, I read it before I was preparing, sort of.
So everyone says pandemic is over, and I don't think the impacts will really leave us for a long time. And I'm sort of fascinated by the life cycle of different industries, right? So, in the very early days, we just had this boom in, housing. We had a boom in home electronics and all the things you needed, right? So, and Zoom Communications, which was a relatively new company, and like all of a sudden everybody needed Zoom, and those have sort of shorter life cycles. But if you think about the life cycle of a commercial real estate building, it's much longer, and the loans associated with that are sort of 7 to 10 years, right? So if we have people working from home, not coming to work, and you have less utilization in these buildings, sometimes less rent, like it takes 7 to 10 years to work through those loan books that are held by all different places in the economy. And we see this in real estate right now. In commercial real estate, we're still working through the impact of COVID. And like we don't even really know.
It takes years.
Not only does it take years, but it keeps changing, right? And so that's one place that's really been affected. I think the labor market is another that will be affected over kind of the medium to long term, because we had a lot of early retirements. So all these kind of skilled labor and people who were hanging on, who were like, this is fine. And then all of a sudden COVID hit and they were like, no, I'm done.
Tapped out.
And they're not coming back. And we had people move, right? So people move pretty quickly, and they're now further away from where their jobs were. Maybe the need is for their skills. And we had less immigration. So we had this combination of things that is, we can still see it today. The economy's real, we see strikes every day. The labor market is still pretty tight. And that may not work itself out that quickly. And that has implications for inflation, our ability to grow, our ability to invest. So some of these things are going to affect us for longer periods of time. And then the other thing I wrote about in that piece was kind of capital floods and droughts. And I think the conventional wisdom is that you love to be in the place that's growing fast. And the challenge with that is that capital floods those areas. So like in the early days of the pandemic, there was tons of spending on R&D. And now we've been in this echo bust of that period of time that keeps going. And conversely, the areas that got really hit hard, if you think about like airlines,
travel,
cruise lines, energy, like we had negative oil prices for a while. And what that does, while it's really painful in the moment, is it rationalizes the industries. Those companies cut tons of cost so that when demand came back, they were positioned to be kind of more profitable than they'd ever been. And the observation I made was like, if you can find industries or sectors that are in these droughts and sort of invest when everyone is kind of doubtful, like those are actually really easy ways, better ways to make money, because those come back over long periods of time and they just get better and better. And it takes a long time to turn the capital spigot back on.
But it forces you to be a contrarian in the moment. Because when Zoom, Teladoc, Peloton, when these stocks went from very low to very high, I think Teladoc went up to $250 or $300 a share, and now it's 80 or 90% lower. But the momentum was so strong so quickly. And then, as you say, some of the travel-related industries were really, really distressed. It's hard to be a contrarian in the moment.
Yeah, it is. It is. I sort of likened it to like giving like a growth hormone to an industry, right? Like it's not super healthy to take to grow too fast. Like actually you want to grow slowly, and you don't really want to have to grow up too quickly, right? Like your 3-year-old becomes a 21-year-old overnight. It would be ugly. I think in those circumstances, you actually have to really pay attention to moats, right? So like right now, I would look today and say like, where are the floods today, right? And every pharmaceutical company is trying to develop a GLP-1 for obesity right now. And but interestingly, like there are some moats, right? Like there's patent protection and like there's technological advantage, and 5 years from now might be a bit different than it looks today.
Investment edge. You have many talents as an investor, but what's your edge? If you had to describe, not necessarily your process fully, but your edge and what makes you different than other investors, what is it?
So I think the thing that I do is I'm able to kind of figure out pretty quickly what the most important thing is, and I ask pretty good questions.
Determining the key thesis.
Yeah. Like I was once told that my superpower is bucketing, which I was like, well, what is that? Is that like carrying buckets of water? Like that's the least sexy thing I've ever heard.
I want to have a different superpower.
I was like, connect.
I'd like to fly. I don't know anything. Right.
So bucketing is this like, you can listen to 30 minutes worth of speak and say, here are the 3 things, right? And so I like to think I'm a pretty good listener, and I can say like, yeah, they said these 3 things. This is the one thing that matters. Here's the question that I think is really important to answer with this company.
Yeah, which is with so much noise, trying to filter through so much noise, the ability to pick out a key theme to bucket like that saves a lot of time, but it really makes you focus on what is the important driver of the long-term success of a company, as opposed to the 50 other things that may come in that are helpful but aren't going to be the driver.
I mean, it's totally true. Like often, like we'll get investment notes that are like 8 pages long, and there's like 17 different points, and I'm like, only one thing matters. Like, what is it, right?
Well, it's a good lesson. It's a very good lesson. Speaking of lessons, you've had a bunch of mentors in your career. Pick out 1 or 2.
Alan Wilson was my first research director, and he's been on your podcast. He's an incredibly special person.
He did a fantastic job. If you haven't watched or listened to that one, our guests who are joining today, listen to that, because he is incredibly funny, and it was very interesting.
He's a really creative thinker.
He is.
He thinks in a completely different way than most people. But what was, among many other things in terms of encouraging and inspiring me, he would come and sit in my office and ask me questions. And every once in a while, he'd ask this really thoughtful question, and I would go away and do tons of research, and then it would be like the most amazing breakthrough, right? And it would just be like, wow, that one question led me to understand my industry in a completely new way. And so he's responsible for a huge amount of my learning, and I love every second I get to spend with him. And he's still doing this for people today. And then the other person who's really important to me is Noriko Chen, who sits next to me. I think it's really important to have role models. And at Capital, I feel like we're lucky to have some really great female role models, but it's nice to have a role model of someone who is an amazing investor, a great manager, who is a great leader, also a great mother, a great spouse, a great sort of philanthropist and sort of nonprofit board member. She sort of does everything. And so like everything that I maybe want to be in my life, Noriko embodies, and it's nice to have someone to look up to.
That's very nice of you to say it that way. She is a remarkable woman. She's also on our management committee, and she and I joined the same year, so we've been working together closely in that capacity for the last 8-9 years. And she just says that one thing, but you talked about the one thing that's important in investment thesis. Noriko doesn't have to speak a lot, but she says that one thing that's important in the moment that makes a big difference. Okay, we're gonna do the office treasure hunt in a bit of a transition here. But in your office, if you ever have a trophy in your office, that's super important. So we have both viewers and listeners. I'll describe this for our listeners. It's a trophy. It's relatively small, about 6 or 8 inches tall, and it's Capital Group 2003 Iron Chef First Place Dish. So tell us about your proud moment. You won an Iron Chef competition 20 plus years ago. Who'd you beat and what did you make?
Well, so, this is a really important award. Like, I probably would have thrown this away, but I kept it because it was an important victory. It was at an early retreat and there was a cooking competition, and I like to cook and think I'm okay at it. And I have a colleague who's a really good cook, who was professionally trained. His family owned a restaurant. Like he knew what he was doing, and we both were in this. We opted into this activity where you were cooking with a team, and we had to make crab cakes with this avocado aioli garnish. And somehow on his team, they didn't read the instructions very well, and so they put everything in one bowl.
Right.
And so the crab cakes had avocado in them, and that did not work very well. And so my team managed to win. And I keep this because it's the only time that I will have ever done anything better in the kitchen than this other person.
Good. Well, you won the cooking competition. Congratulations. And that will remain in your office, I'm guessing, to the day you retire from Capital Group. Those are the kinds of things you just have to keep forever. You read a lot of books. You listen to a lot of books. I think the number was 75 or 80 last year. Can you give us a couple that you'd recommend to folks?
Yeah. Last year was a big reading year for me because I had a little bit of time. And I'm going to do 3 quickly.
Okay,
so the one I loved the most was The Covenant of Water by Abraham Verghese, which is sort of a medical mystery and an epic about a family in India. It's beautifully written. It's eminently quotable. It is a great story with incredible lessons and like a beautiful read. And Dr. Verghese practices at Stanford. He's a remarkable human being who, is both a physician and an amazing accomplished writer. I loved The Midnight Library by Matt Haig, which is a fun book for helping you sort of question all of the decisions that you've made in life. And then...
in a good way?
Yeah, in a great way.
Okay.
In a great way. It's a very clever book. He's a clever author. And then I loved this book called This Is Happiness by Niall Williams, who is Irish, and he writes about a town in County Clare getting electricity and when he was a teenager. And it's beautifully written, incredibly funny. If you listen to the audible of it, it's read by a guy named Dermot Crowley, who's an Irish stage actor who I think is amazing. And it's just this incredibly sweet, beautiful story that makes you appreciate the moments in life. So
those are great. You read a lot outside of work. What else do you do? You and Michael have 2 teenage boys, but what do you like to do together as a family?
We love to do things outdoors. So we do a lot of hiking and a lot of skiing. I watch a lot of high school sports, specifically high school tennis, which is a lot of fun. I like to do the spelling bee and the Wordle every day.
I'm possessed by Wordle. I'm with you. My wife, my daughter, and I have judgment-free Wordle, we call it. So if you get it in 2 and you get it in 5, there's no judgment applied to that. Are you a daily Wordle person?
Yeah, I mean, it only takes every once in a while I miss, and I
got to start your streak over.
I love it when I miss. No, I really don't care about the streaks.
Okay. I care deeply about the streaks. but go ahead. So you like doing that and spelling bee and others?
Yeah. I mean, I love to learn. So I'm starting a book club in 2025, which I'm very excited about. I like to do Liberty puzzles. I like to learn. I like everything. I love art. I love music. I love athletics. I'm all over the place.
And those two boys, did they change your perspective? Did that parenting of them change your perspective on investing, or not really?
Well, I have learned a ton from being a parent. It's like that one of the toughest jobs you'll ever love kind of thing. Yep. But in addition to learning a lot about video games and ChatGPT through them, I feel like there's some big picture learning. So I did actually write a piece during the pandemic around sort of what parenting had taught me about dealing with kind of crises. And I made this analogy. One of my sons is dyslexic. And in the moment where we had to where we were just trying to understand what was going on, that was the worst moment. And I realized actually that uncertainty is the worst feeling, right? So, and I made this analogy to the beginning of the pandemic where nobody really knew how the virus, where it came from, how it spread, and everyone was in this, how long it would last. There was this huge panic. And that is the worst moment. Uncertainty is the worst moment. And it actually starts to feel better as soon as you start to do something and take action, or even just understand a little bit. Even if you realize it's going to be 3 years, it feels better. The other thing I realized is that if you have a problem, letting it fester doesn't make it better, right? So if you have an issue, going at it hard and really trying to solve it is the best way to move forward. And then the last thing I realized is that everything is a phase. So you never really go back to the way things were in the pandemic. We're not going back to the pre-pandemic world, but whatever phase you're in is just a phase, and you will have a new phase. And what I said about parenting is the faster you adjust to whatever phase your child is in, the more peaceful your life will be and the more sleep you'll get.
Wait for the next one.
Yeah, exactly.
Gives you the energy to hit the next one. Let's finish up with a moment of gratitude. I will share with you your mug, but please tell everyone something you are grateful for, professional, personal, whatever's on your mind.
Well, I'm super grateful to be here today and to be able to be at work every day. About a year ago, or a little over a year ago, I was diagnosed with an early stage breast cancer. And I spent several months having surgeries and recovering. And I'm so grateful to the radiologists who detected this so early, to the surgeons who took really good care of me, and to my family and my friends and my work colleagues who supported me so well during those moments. And I'm so grateful to be able today to be spending my intellectual energy focused on picking stocks and making good investment decisions instead of thinking about what my path of therapy is going to be. It was a great experience for sort of putting everything in perspective. And so I wake up every day grateful to be able to be here and do this work.
Well, that's well said. And I'm grateful you're back with us. I remember when you were heading out to face this challenge, we were all thinking about you, and we all couldn't wait for you to get back because you make a difference here. And you and I have talked about it. We've served on a bunch of different committees together. And when you rotate off the committee, and I'm like, oh, God, Cheryl's so great on these committees. And whatever you do, you tend to do really well. So we're grateful that you're back and you're healthy.
I'm really happy to be here. Thank you, Mike.
Thanks for joining us today. If you enjoyed the podcast, spread the word to somebody else who might benefit from hearing these great stories from our investment professionals. And also, please subscribe to Capital Ideas wherever you get your podcasts. And have a great day.